It's 12 o'clock and good afternoon, and welcome to today's webinar on future-proofing your small business. Today's presentation is brought to you by the University of Illinois Extension, Bradley University Small Business Development Center, and WestPoint Financial Group. Hello, my name is Richard Proffer, and I'm a community and economic development educator for Extension, and I will serve as the moderator for today. Like the webinars that we've done in the past, and you may have been a part of those, we have a few housekeeping items that we want to cover. This will allow for an enjoyable experience for our attendees, and we're going to go over those at this point so we all know what's going to happen. For any questions or comments, please put them in the chat. We will be monitoring the chat throughout the call. The chat button is at the bottom of your screen. Just hit that, type in your question. I will ask those then at the end of the session for the Q&A. If you want to ask your question directly, we will do that after we get through the questions that come up in chat. This webinar will be recorded and for viewing on our Extension Community and Economic Development YouTube channel. You, as an attendee, will also receive, excuse me, an email with a link to the presentation, the slides, and any other applicable materials. So that's how the day's going to follow for us. We will be doing a 1 o'clock hard stop, but what we will do is if there are questions that we do not get answered, we will make sure that they get to our presenters, and we will put that into what goes out to everybody. So now, Nancy had a comment she wanted to make about the fact that we are recording. So Nancy, I'll let you do that.
Good afternoon, everyone. Just wanted to let you know this session's being recorded. You'll receive slides and a recording as a follow-up to this webinar. We had a good sign up for this webinar today, and we're happy to provide a recording for folks to view as well. And if you didn't register for today's webinar, you can always direct message me your email if you're just joining now and have not registered, and I can make sure you're on that email. And finally, the closed captions are an option for individuals to select at the bottom of their screen with that CC icon. And thanks for joining. Enjoy the presentation.
Okay. With that said, and thank you, Nancy, because those are all very important things for the for us to be accessible to our participants in the webinar. One of our co-sponsors is the Bradley University Small Business Development Center, or as I say, SBDC, having been a former SBDC counselor. So at this point, I would like to introduce Chris Youngmark, who is the Assistant Director of the SBDC at Bradley University. He's going to tell us a little bit about his center there on Bradley, here in Peoria, Illinois, and introduce our guest speakers. So Chris, I'm going to turn it over to you so you can share.
Thanks, Richard. I'm going to pull up my screen here. Okay. Should be all set there. Thanks for the introduction. Welcome, everybody. Thanks to our organizers and the audience for participating today. We're excited to co-sponsor today's workshop with the University of Illinois Extension. My name is Chris Youngmark. I'm the Assistant Director of the Illinois Small Business Development Center at Bradley University. We're part of the Turner Center for Entrepreneurship here at Bradley, which includes the Illinois SBDC, the SBDC International Trade Center, Apex Accelerators, our business conduit to government contracting, as well as the Peoria Next Innovation Center, our business incubator. Our contact information and social contact information is listed on the screen here, so you can follow up with any inquiries afterwards. All right, see if I can advance my screen. Okay. Sorry, technical difficulty. All right, thank you for that. At the SBDC, I enjoy the role of rural outreach and small business support, and among my many goals are bringing bridging the urban and rural divide and connecting more tools and resources to entrepreneurs and business owners across our region and across our great state of Illinois. In addition to Peoria Metro, our center provides services to parts of 7 different counties in central Illinois, including many rural and underserved communities. The SBDC at Bradley University is actually one of 35 different centers around the state of Illinois, and we're also part of a national network of no-cost business advising services. Our center has a 37-year history of providing confidential and collaborative services to our local businesses in Greater Peoria and Central Illinois. We're funded in part through the Small Business Administration at the federal level, the Department of Commerce and Economic Opportunity at the state level, and then of course our host organization, Bradley University. We also recognize that our marketing efforts and our online presentations sometimes do extend beyond our service territory. So there's an SBDC locator link on this screen. If you want to search by zip code, you can connect with the SBDC local to your business operations. So I'm going to pull down my slide here and turn it over to our presenters, if I can get that going, while I continue my introductions. Rayna Grady is a financial services professional at WestPoint Financial Group here in Peoria, Illinois. Rayna is a graduate of Bradley University, and we began collaborating after an introduction at a small business association meeting in Eureka, Illinois, here in Woodford County. Vincent Silva is a partner with WestPoint Financial Group. Vince is a graduate of Carthage College, and he holds the designation of Accredited Investment Fiduciary and holds multiple FINRA licenses. Vince resides in Chicago, and his vision has always been to help clients by taking a holistic approach to financial planning. At the SBDC, we assist small businesses and entrepreneurs at all stages. That also includes educating on retirement planning for the business owner and their employees. I'm sure that Vince and Rayna will agree that you cannot start planning too early. So without further ado, please welcome our topical presenters today, Rayna Grady and Vince Silva.
Awesome. Well, thank you so much for that welcome, that warm welcome, Chris. Gotta say, we are super excited to share the virtual space with all of you this afternoon and to be able to co-host today's webinar. Vince and I are going to be very brief and productive today during our conversation, but we want to leave you with some great information to take home with you and some things that you should be thinking about as business owners. We're going to talk about the Illinois Secure Choice Act today in regards to some of the information that's posted on their website. And then I'll hand it over to Vince as well to discuss options outside of the Illinois Secure Choice Act and to dive deeper into business planning, retirement planning, and succession planning. Okay, as Richard mentioned, if there are any comments or questions, feel free to pop those in the chat and we'll be sure to get around to those at the end of today's conversation. So let's jump right into it. The Illinois Secure Choice Act now requires that every employer and every business owner that has 5 or more employees that has been in operation for 2 or more years to provide their employees with a retirement savings program. Okay, that's not necessarily bad for you all, just because a lot of times as individuals are looking, for work, they're looking for employers who are providing them with some benefits. So this is not so much of a bad thing at all for you all, but that is now a requirement and it's become more stringent for you as business owners. The deadline is approaching November 1st, 2023, in order for you to comply with the new state law of providing your employees with a retirement savings program. Vince and I will get into this in our discussion. Oftentimes, we like to work with our business owner clients to make sure that they have those competitive benefit packages for their employees, and to provide them with the retirement savings program. Within the Illinois Secure Choice Act, as you sign up, if you decide to enroll, you as the employer, you as the business owner will be the facilitator of the program, which means you will maintain your employees and your staff roster. And the state of Illinois would actually administer the program. So they'll actually take over and do a lot of the legwork there, where they're really just administering the program, where you just act as the facilitator. Now, oftentimes when we think about opting in into the state of Illinois or just being automatically enrolled, it may not be the best option for you or not as efficient for you in planning, but there is that option to go ahead and enroll to ensure that you have some type of retirement savings program for your employees. Okay, and so with that, when you're maintaining your staff roster and the state of Illinois is administrating that, employees have about 30 days to say they want to participate in the program. So once they participate or opt into the program, they have about 30 days and they'll be automatically enrolled in a Roth IRA as the option that the Illinois Secure Choice Act is providing for your employees. Now, once they're enrolled and decide to participate, those deductions come out of their paycheck, and it's a 5% automatic deduction from the payroll. As seen on the website, that automatically increases to 10% over the years. And with the Roth IRA, the employer, the employer, does not contribute. So oftentimes, you see a 401k or traditional IRA where the employer is contributing while the employee isn't contributing. But with the Roth, there's no employer contributions to the plan. Okay, now if the employees decide not to participate or they decide to transfer it over, they decide to roll it over, they absolutely can do that. It is portable, so they're not locked into the Illinois Secure Choice Act or the program that the state of Illinois is providing. Of course, with the Roth IRA, there are income limits. So again, it might not be efficient for you or might not be the option in terms of providing your employees with that option to go ahead and enroll in the Illinois Secure Choice Act. There's some thresholds, and if you exceed those thresholds, you might not be eligible to participate in the Illinois Secure Choice Act program. And then I'll go ahead and pass it over to Vince to discuss the other options.
Yeah, just to piggyback on Rayna, first off, thanks for having us. We're excited to be here with you all. The Illinois Secure Choice Act is, I would kind of assimilate it to the Miranda rights of financial planning and retirement planning, right? Like if you do not have an attorney, one will be appointed for you. If you do not have a retirement plan for your employees, one is going to be appointed to you. Oftentimes, the one appointed to you isn't the best option you have, but it is there's no cost to the employer. There is a relatively high cost for what it is of the Roth IRA to the employee for opening up the Roth IRA. And there's a lot of limitations, right? You have to, once you make a certain amount of money, depending on if you're single, head of household, married, filing jointly, you're phased out of Roth IRAs. And so you need to work with a CPA if you do have a Roth IRA to make sure you're not putting money into it when you actually don't qualify for it. There's big tax and penalties for doing those things, but overall, it is a good thing. So we are financial planners. We do comprehensive financial planning. We specialize in the closely held business arena. So we're not really working with publicly traded companies. It's all family businesses. I don't like to use the word small businesses because sometimes these are very, very large size, but they're closely held businesses and business owners that we work with. Most of those business owners that we work with, their business is their retirement plan, which it's okay, but it's not something you want to lean on, and we'll spend some time on that. The Illinois Secure Choice Act, the benefit of it is the biggest issue that I'm sure all the business owners on this call would agree with is one of the hardest things that we face in today's world is attracting and retaining employees, right? Once we get them on board, if we find a good one, it's how do we keep them? Benefits are becoming more and more important. So being able to say, yes, we offer retirement benefits is a good thing. For the same cost, which is zero, you can set up things that are better than the Illinois Secure Choice Roth IRA for your clients. There's other options, and we'll spend some time on that. But I want to focus the rest of our talk, and we do a 3-part seminar that's a few hours. I'm going to try and condense this into 30 minutes. So I'm going to share some things. I'm going to breeze through some slides. We want to open it up for question and answer at the end. But I want to focus on you and not so much your employee right now, because that's who's on the call here. So what we're going to talk about today is, starting with the end in mind, is when you have a business, is how do you exit the business, right? A quick disclosure: this is not legal or tax advice. So please seek legal or tax advice if you're going to follow through on any of the things that we're about to show you. So just some interesting, staggering statistics, right, from retirement planning. 80% of business owners have 90% of their wealth tied up in the business. Of that, 65% of business owners have less than $500,000 in their own personal retirement accounts, right? 57, more than half of all business owners do not have enough value in their business to be able to exit the business, right? Some other kind of staggering statistics on that, right? 81% of business owners save less than $25,000 a year annually for retirement, right? What are they doing? They're putting all their money back in the business, all of their eggs in one basket, right? 58% of retirement accounts that have less than $200,000 in them. And then the average closely held business valuation is about $2.6 to $2.8 million, right? So if the value is 2.6 and you were able to sell it for 2.6, is that $2.6 million going to be able to last your entire lifetime, right? A safe withdrawal rate is about 3%. You may have heard of kind of that 3-4% rule. So you're looking at around $90,000 a year before you pay taxes on the money on the average closely held business there. So just some stats there. So when you put all your eggs in one basket and the business is your retirement plan, there's some things that you need to be kind of certain of and be aware of, right? Number one, you better hope that you get full value of the business when you sell it. If you're going to pass it on to children, right, we better hope that they're willing to pay you a salary until the day you die, or that the children or any future buyers of the business are going to run the business appropriately so that business can sustain the payout of the installment payments to you as the former business owner. Otherwise, you're going to have to delay retirement. You're going to have to get back involved in the business, or you're just going to have to accept a lower standard of living. And all business owners, I think, would agree. We go into business to be autonomous, right? To be able to control our futures and destinies. And then at the end of it, to have to go back to being, man, I wish I would have just been an employee, or I wish I wouldn't have done all that hard work to do it if it wasn't. So we want to shift the mindset and help you think bigger about what the purpose is and why you are in business. Though it is your largest asset, oftentimes it should not be the only asset. And right, diversification is, we've all heard of that a million times. So what we want to shift our clients that we work with is going from a lifestyle business owner to a value growth business owner is what we call it. So lifestyle business owner, a lifestyle business owner is somebody who's focused on that business, providing them with income so that they can live their lifestyle. What we instead want them to start to think about is, how do we create this business to create impact, to make a difference, and to have enterprise value that can often create generational wealth, or be able to just be there after the exit of the business. So just some characteristics of lifestyle versus value on the screen, right? Lifestyle on the left, again, like I said, and we usually spend a little bit more time on this, focus is current income versus enterprise value. What does success look like? I can live my lifestyle versus selling at the highest multiple. And I'll save you some of those things that you can read on your own, though. So we want to just think bigger about what the business is. So when we sit down with our clients, and we want to build out a retirement plan, a financial plan, there's 5 steps that we follow that we look at. Number one is we need to have a clear picture of what does retirement look like, right? Many businesses in the startup phase, the last thing they're thinking about is what retirement is going to look like. I promise you, only good things are going to happen when we spend time on that. How much income replacement value do we need from your business? right? We'll talk a little bit about this later on, but oftentimes business owners think about what they're taking and spending, but they don't think about some of those ancillary benefits, like the car that the business was under, or the meals that get written off that are business expenses and all those different things. So we want to understand what is true replacement value of the business, understand what are your exit strategy options and how they could all impact your retirement and your future family over time. Know what retirement savings vehicles are available outside of the business. We talked about the Roth IRA that comes in the Illinois Secure Choice Act. That is an option, but there's also many other things that you're going to want to have personally for yourself in order to kind of sustain that lifestyle. And then documenting roles and responsibilities in the business once you retire, if you're going to continue to receive an income. Most business owners want to keep those closely held businesses. I'm stereotyping a lot here in the family, but there's often times where that does make sense, doesn't make sense, just based on some of the planning or lack thereof that was done. So the personal financial plan can help determine the amount of savings needed to meet the retirement goals, right? As we're kind of diving into that financial plan, we also want to look at some assumptions, right? So how much money do you expect you're going to need in retirement? How long are you going to live? When are you going to retire? What is going to be inflation? Are we going to assume inflation's 2% or 8%? What type of return are we going to get on our investments? What are healthcare costs going to be in the future? What are are we going to need long-term care at some point? Social Security, is it going to be there? What percentage? So these are all factors that we have some pretty robust financial planning software that we can run different scenarios and stress tests to be able to give our clients real clarity around what they're trying to accomplish, to know that, hey, if I do this, this will happen. And if I change some of these what if scenarios, that's maybe what I need to do differently in order to then still be on track. Reminder, I can't see any of the chat stuff. If any questions do come up, please write them down and we'll make sure that we address them here, relatively momentarily. So retirement planning. The first thing when I ask our clients, hey, when you exit the business, what are your plans? Right? They all say, I want to retire, or I want to travel, or I want to be involved in charity. Little to none of our clients that are business owners say, hey, you know what? I want to go work for somebody else. I want to go work in that business that I just sold, or I want to go start another business. They want to take their foot off and they want to enjoy the fruits of the hard work that they did. Well, with proper planning, that's very viable. Without proper planning, and where most business owners are caught up in the day-to-day, they oftentimes have to go back and work back in the business for somebody else, or they have to go start up another business because they didn't get the buyout that they wanted, or the transition wasn't done appropriately in order to maximize what they needed from a lifestyle replacement. So shocking stats, right? 20% of business owners plan to retire in the next 5 years. However, 83% of them have not set a timeline for that exit. I have a goal I want to do in 5 years, but I have no idea how I'm going to do it. Right. So we want to help people in that regards. So we're going to talk about exiting the business. Right. In order to exit the business, the first thing you need to have done is a business valuation. Right. Most businesses kind of have a self-valuation that I promise is always going to be different than what an actual business valuation is, because we all value things that are maybe not monetarily transferable. But there's different ways that you can do it. You can do book value, market value, all these different things that you see on the screen here, right? A certain percentage of, or a certain multiple of earnings, EBITDA, etc. But what we have to remember too is, what is your income replacement? I've said that a lot here, and we're going to kind of go back to that a bunch. So income replacement, not just what's your salary and what are the profit sharing that you're taking out of the business, but what about insurance? Your business is probably paying for your insurance. You're going to need that once you retire. You probably weren't paying into Social Security. Company paid car, travel, meals, right? The business was probably paying for your car, right? Your travel and meals were a business write-off, rent paid to the owner's real estate entity, and other companies like stock options, etc. So it's just more than just what was the salary that I was drawing from my business. How do I replace that? So we want to start early on in that relationship with our business owner clients to start filling that gap. So we know that the book value is, we'll call it 2.5 million, but in order for me to have my income replaced, I really need a $10 million buyout. Well, the business is only going to be worth the book value, and no one's going to pay you, your lifestyle because of that's just how it works. So the second you start making a profit, we want to start saving money outside of the business. All right. These colors are not lining up here, but I think the concept makes sense. The second we have profit, we want to add some savings and investments in other outside vehicles. Right. So this gray bar is actually the income replacement value that we need to make up. And over the time, by the time we exit, if we do a good job, we have the estimated value of the business plus my savings and investments, which is going to be the total amount that I need to maintain my lifestyle goals and long-term objectives. So where do we save money, right? So there's some cool things that as a business owner, the IRS favors business owners, right? They want us to, as business owners, they give us tax breaks because we create jobs, and jobs pay, those employees are going to pay taxes, and that's going to, that's how capitalism works, I guess. But there's many different options here, just a handful that you can use in lieu of or in alternative of the Illinois Secure Choice Roth IRA. Depending on how many employees you have, a SEP IRA, which allows you to put $60,000 a year instead of just the $6,500, is an option that some business owners can use. Those dollars that go into a SEP have never been taxed. When you do take them out, they will be taxed. Pros of a SEP IRA, you could put a lot of money away and defer a lot of it in taxes. So you can, you can really defer a ton of money. However, for any amount that you put into your SEP IRA as a business owner, you have to do that for your employees. The direct alternative that I would say 99.9% of our clients we do instead of the Secure Choice Roth IRA is the Simple IRA. Simple IRA has the same exact cost to the employer as the Secure Choice. That cost is zero, right? You have to have under 100 employees for the Simple IRA to work or to be an option. And it allows you to put about $16,000 in 2023 away into the retirement vehicle, whereas the Roth IRA was only $6,500. The Simple IRA also does not have any income limitations. So you can make $1 million a year and still put money into the Simple IRA. Simple 401k, solo 401k, same thing. 401k is just an ERISA plan versus an IRA is an individual retirement account. 401k technically stands for the section 401k in the IRS tax code, and then defined benefit plans, which are pension plans, or some other great options we have. So there's no one size fits all, and there's often not just one option is the best option. It's usually a combination of all of these working together based on what are the objectives of the business and the business owner, so that we can ultimately create the best exit strategy, not only for the business owner, but also because the business owner gets to put their money in all these things as well as their employees. Very small chance that a business owner that is using the Secure Choice Act is going to be able to max out the Roth IRA for a long, sustainable period of time, and that would be enough to fill that income replacement gap. So common strategies. So I just want you, so there's 6 different, the most common strategies we see for exiting a business is selling it to co-owners. So if me and my siblings own it, selling to, one of my siblings when I get out. An ESOP, which is an ERISA plan, an employee stock ownership program. This is a really awesome thing. I'll explain that in a minute. You could just shut the doors down, say business is done. We could transfer it to children, sell it to employees, or sell it to a third party. As you can see here, the most common sale is to a third party, a private equity company, an outside buyer coming in and taking over the family business. I don't know how you guys feel, but that is oftentimes the least desirable want for any family business, is that somebody else is going to come in and, wash away my children's, the name on the company was my name. Right now, somebody else owns it. However, I'm going to use an example of, let's say this small mom and pop business grew to $100 million business, right? And it's still a mom and pop business. It's just creating $100 million book valuation, right? Well, if my son is now running the business and I want to not just collect a paycheck for the rest of my life, but see $100 million, my son doesn't have $100 million to just buy me out. So in order for me to get that big lump sum of money, I have to sell it to a third party or somebody, that has that kind of money. One option that we can do is we can use the ESOP. What the ESOP does is it gets a bank involved, and the bank pays me, the business owner, the $100 million or some amount of that, right? And allows my family and the rest of the people in the business, essentially all the employees, the company turns into stock. I'm trying to put this really simply. The company then turns into shares of stock, and all the employees have stake in the business and own some of those shares. So my son or daughter, who I want to pass the business on, can retain 51%, so they can still run the business. I can get my paycheck, and everybody's hands are in the cookie jar to kind of keep that family business to family business without bringing in outside investors. So there's a lot more to all those situations. We work with all of our clients at the beginning of that relationship, really understanding what is that exit strategy. And the ultimate goal with that exit strategy is for that business owner to completely remove themselves. So the business owner's hierarchy of involvement, right? The goal, exit with no ties. This is best for everybody, right? Business owner is not going to think so, but I promise son or daughter that's taking over the business would think that it's best if mom or dad just got out of there. So you can stay active indefinitely, right? That can cause obviously issues. You can exit, but still earn a consulting fee, act as a silent partner, or exit with no ties is the ultimate objective, right? If we can make it work. Once we do let it go, we have kind of this process for how do we do it, but essentially we got to stick to a date and stop showing up to the office. Better for everybody. So I'm going to kind of end right there a little bit. I'll review the 5 simple steps for retirement planning. If you took nothing else away, start thinking about the exit strategy. Rayna and I would be happy to sit down with anybody that would like for a free consultation and just have an introduction, allow us to learn more about you and your practice and your business, allow you to learn more about us and our practice and our business. And if there could be a mutual benefit, we'd love to help. Our contact information is on the screen. You will get a copy of these slides as well. But if we want to take a picture of that on your phone, our emails are first initial last name @financialguide.com. So we are at 12:33. I want to open this up for any question and answers if we have any, and we'll go from there.
Okay, Vince and Rayna, can you all hear me? This
Yes.
is Richard. Yes?
Yes, we got you.
Okay. Well, thank you all for sharing information on some ways to future-proof your small business. Certainly a topic that many small business owners need to be aware of. And I remember my days as a small business counselor. They weren't, and we've got some questions that have come into chat. The first one that has come up is, does a SEP IRA have income criteria, or is it a limited annual contribution?
Yep. So it does not have income criteria. It does. You can only put up to 25% of your income into the SEP IRA up to the annual amounts that are allowed. I believe contribution limits for 2023 are $66,000. So if my business is making $1 million a year, right, of revenue, but as the business owner, I'm only realizing $100,000 of income. The most that I can put into a SEP IRA is 25% of the income that I'm realizing and paying taxes on, because the SEP IRA, the key word is IRA. It's still an individual retirement account. So I can only put 25% of whatever my income is. Now, if my income was $1 million a year, right, I can't put $250,000 in there. There's an income limit or a contribution limit of $66,000 in 2023. And that usually goes up every year or two with inflation.
Okay. Another question that came up is, and this is clarification, what was the number of employees again that a small business was required to have in order to put into play and my mind goes blank, but the state required program?
Yes, so any employer with 5 or more employees is eligible to enroll into the Illinois Secure Choice Retirement Savings Program.
So it's 5 or more.
5 or more employees, and you have to be in operation for 2 or more years.
Okay, and then you gave us a deadline. What was that deadline again? November
1st.
And that deadline was for them to.
So the deadline for that is to provide your employees with a retirement savings program, whether you're enrolled in the Illinois Secure Choice or if you just provide them with something outside of that.
Okay, so the deadline is they have to have it provided to the employees before that date.
Absolutely. Yep.
Okay.
Illinois Secure Choice Act has a fantastic website. They also have a fantastic frequently asked questions. And if you Google Illinois Secure Choice Act, and I'm going to just, if you just Google Illinois Secure Choice Act, one of the links that comes up right away is FAQs. And there it's been really, they try and make it as easy as possible. So when somebody doesn't have a relationship like us as a business owner, and they know they have to do it, that kind of becomes their financial advisor, is that website. I would suggest, if you're going to go that route, to kind of block off a half a day or a full day to really getting it set up. It takes up a couple of hours to, you have to get a census of your employees, and you have to set up payroll deductions, and it can be a little bit, it's simple, but it's not easy type of thing. Again, the simpler and easy way is doing a simple IRA through a financial advisor, or you could do that on your own as well. But that seems to kind of check the box and potentially be less expensive for the employee.
Okay. The question came into chat, how is that November 1st deadline going to be enforced?
No idea.
Okay.
Yep. If they do kind of run an audit or report on the online website, it does show that you will be penalized if you don't provide your employees with some type of retirement benefit.
Okay. So there's going to be some kind of database,
Right?
They can look at. Okay. And also for reference, Chris put into the chat the link to the secure Illinois Secure Choice website. So you can feel free to copy that off if you need to, or it will also be in what you received today. You all mentioned on the Secure Choice, do you think by an employer registering for this program, does it make them more attractive in today's job marketplace?
Absolutely. Right. I think, Rayna and I are both business owners ourselves, and, we have employees on our team, and the hardest thing we have, and the hardest, oftentimes the hardest thing that our clients that are business owners have is, like I said, attracting and retaining talent. And we find more and more that people want benefits. And why would I come work with you, Vince, if you don't offer a retirement planning solution when I can go work for business XYZ that not only has retirement benefits, but also does matching contributions. The simple IRA, the employer can match contributions.
One of the questions in chat reminds me of what happened whenever the Affordable Care Act rolled out. Are there any challenges that an employer commonly encounters during the enrollment process?
I think what we find, I mean, most of our clients, right, aren't using the Illinois Secure Choice Act. So it's hard for us to, but when I have had clients that have started there and then I think the problem is just the inert, like once you get started and once you find a good, hey, this is the process, it's fairly straightforward, but it's that initial jumping off point is where most of that issues would arise. But they walk you through, hey, this is step one, and then step two, step three. But you are working with the state of Illinois and, trying to get a hold of people when you blocked off a half a day. And if they don't answer the phone that day and they call you back and tomorrow you're in the field, that's the hard part.
Right.
Okay. Another question that's come into chat. It sounds like this is one option that you could choose. So what are some of the benefits with coupling secure choice with other options? Is that a good thing to do or what, what would you say to that?
The secure choice is just setting up a Roth, as simple as it is, it's just setting up a Roth IRA for the employees. Right. So it pretty much states if you're an employee of a company with 5 or more employees, you have to be putting some portion of your income away for retirement. Right. That is a good thing because not to get off topic, but you remember, if we all think of our grandparents or great grandparents or parents, right, they all had these things called pensions. And they retired with a pension and a paycheck the rest of their life. And many of them even got like a gold watch upon exit. Right. Well, at some point, in the 70s, 80s, those pensions went away and these things called 401ks came out, which just says, hey, the business owner doesn't have to fund a pension anymore. Now it's all on the employee to tackle their own retirement planning. Now, there's no laws that say they have to do it. So as we know, Social Security is running out of money. So if employees aren't putting any of their money away for retirement and Social Security runs out, that's not a good thing for our children in the future, for just society in whole. So it is a good thing that it forces somebody to put money away for retirement. You can adjust the 5% as the initial amount. It automatically increases 1% a year. You can turn that off. There's different features of it. If the business owner is able, the second they're making a profit, right? We like to use simple IRAs as kind of the first step, as I talked about, because it allows you to let the client have skin in the game. You can say, hey, I will match dollar for dollar, 1%. If you put in 1%, if you put in 2%, Mrs. Employee, I'll put in 2%. If you put in 3%, I'll put in 3%. Or you could put in I'm going to give you 2%, hands down, no matter what. There's different ways that we can structure that.
Okay. And then Vince, one of these questions pertains to a particular slide that you went to, and it was the one with business owners planning to exit the business. If you could go to that slide, I'll finish the question.
Here. What was the slide?
Business owners plan to exit the business, how they plan to exit. Sell it, give it to the family.
Oh, yeah. Okay.
What was the common overlap of that one? Is there any common overlap? Are there opportunities to overlap those or not? First of all, that's the first part.
Are there common overlap with those? I think I don't know the details of that. I guess the concept that we're trying to say is most business owners, when they're first asked, or they say, hey, rank these in order of which way you would like to do it, is most business owners don't say first off, right? I want to sell to a private equity company. However, that oftentimes is the way that they kind of have to go about if they do bad planning.
Okay, this might help answer the question. Your numbers at the bottom equaled 163. So that's where I think the overlap question comes in. It equals 163 versus 100.
And I can just say, from looking at the result spread on that slide, it made me think that there was a survey of employers and that the choices they could choose from on how those businesses were transitioned allowed them to choose more than one answer to the question. And so that must be the breakdown of responses in like an employer survey, which would then yield over 100% because of it being multiple choice instead of a single choice answer on that survey. That's just what I assume, but you can, of course, throw out other possibilities as well.
Good point there, Nancy. Anything, Rayna or Vince, you want to go add to before I move on to the next one?
That was perfect.
Okay. Let's say you're an employer who offers secure choice, and you do it from day one on a diligent basis, but you still lose employees. Is there some kind of benefit you could add to secure choice in order to reduce turnover? Or is secure choice, and you have to do other things outside of that?
Yeah. So there's no one size fits all answer, right? It's really understanding how many employees do you have, what's important to them, and it might be vacation time, right? Some people are incentivized by higher salaries. Some of them are incentivized by retirement benefits. Some of them are, maybe you could offset healthcare costs. Maybe you could offer disability insurance or life insurance or pet insurance or daycare subsidies, or you get really creative in making them feel appreciated of being your employee. Some people just want more money. So I think the first thing is having a survey or understanding, what is the love language of the employees, and then creating using the resources that the business owner has appropriately. But I gave you some examples of just ways to decrease turnover.
Okay. So this plan and is just one piece that an employer can do to reduce turnover. It's not this or nothing. It's this plus other things if the employer chooses to do that. Am I understanding you correctly there?
Correct.
Okay. Another quick question, and because some people may or may not notice this, and you'll notice the polls up. We'll explain that here in just a minute. But you mentioned that secure choice is portable. What exactly does that mean?
Yeah, great question. That means if you move, like, let's say I work with company XYZ, and I was in a secure choice retirement plan, and then I switch my employer. I quit that job and go work for company ABC. I can then take that Roth IRA and portable, I can take it with me and move it to my new company.
Okay. So it follows the employee.
It can follow the employee.
Okay. I'll explain the poll here, and then we still got some more questions that have come in. But as we do with all of our webinars, we have a poll, and we ask our attendees to answer the question, because for us in the world of academics, it's good for us to show the change of attitude or change of belief, or a degree of learning that these webinars provide. And that allows us to justify and to continue though. So if you would answer the poll while that's going on, this takes a few seconds. I'll go ahead and ask a few more of the questions that have come in. I want to ask you a question, Vince, because you talked about it, about most owners are putting money back into the business instead of their retirement program. What do you think? What is their thought process for doing that? Because don't we all want to make sure we retire successfully?
Yeah, I think and I don't disagree with that. You should, you have to, your business is often your best rate of return, right? So if I take my money that I can reinvest in my business to hire a new employee that's going to go create millions of dollars in sales, that's going to create a better book value for my business, that's a great use of my money, right? However, like, it shouldn't be all your dollars driven in that route, because you're going to then pull income out of the business and it doesn't translate into book value 100% dollar for dollar. So it's just wise to diversify your assets. But I totally understand. And we don't ever tell a client they shouldn't put as much money as possible into the business. But the second you have profits, you should be putting them in other places as well. Because what if laws change, right? What if contracts change and that business change and all your eggs are in that one basket? It's just risk and reward.
Okay. Another question has come in, and I think I know the answer, but that means that's a dangerous question because I think I know. You're an employer and you already offer a program for your employees. Do you have to do secure choice?
No.
No?
Nope.
Okay. So good thing I asked. And thank you for the question that came in on that one, because I was thinking it was a mandatory thing.
But if you do have a retirement plan and you're doing a 401k, please reach out to us and we can audit that 401k, because 401ks that need to be looked at about every 3 to 5 years. There's a lot of internal costs. You need to bring in a third-party administrator. They charge a lot of money. It's got to go through ERISA, which just means it's got to be scrutinized and it's got to pass different tests for it to be legal. And we'd be happy to do all that free of charge.
Again, want to remind the attendees to put questions into the chat. We've got a few here that I've gotten written down for us to go to, but feel free to continue in case more come to mind. Vincent and Rayna, you all mentioned the 5 steps of retirement planning. How important is that to helping owners decide on what retirement path or what retirement plans they should make? Those 5 steps, how important is that?
I mean, I think Rich, it's crucial to have those 5 steps. And I think there's more than just the 5 steps, but that's just kind of if we're trying to break this down into a very understandable, you got to understand where you're going, right? You got to have a roadmap for life. So if you don't have a plan, it's pretty tough to get to where you're going if you have no idea where you're going.
Okay. And I think of my financial advisor, who is, when I go through on my own personal retirement on the personal side of my life, he certainly has a roadmap and questions he always asks me when we meet annually to go over my stuff. And so it was interesting to think of your 5 steps there that you had. Is it typical? Do we spend more in retirement than we do in our working life, or do we spend less in retirement? What's your thoughts on that one?
Yeah, no, the statistically, the correct answer is the average person spends about 60 to 80% of their pre-retirement income in retirement years. Now, all statistics are just, a percentage and a statistic. So what majority of people, as they age, their homes get paid off, their children move out, and life gets less expensive. On the flip side, though, there are some that, right, they buy vacation homes and their children end up living in the basement with their children, and healthcare doesn't go as planned. So But as a rule of thumb, you should probably plan with about 60 to 80% of your pre-retirement income coming in retirement to maintain the same standard of living, because you don't need to save money anymore. Home's paid off, kids are gone, kids eat a lot, food costs a lot.
Rayna, anything you want to add to that?
I think Vince pretty much covered it all, but yeah, I absolutely agree. Like, it's crucial to start with a plan, because like you mentioned, we always talk about when we're focusing financial planning with our clients, what is your goal 3 years from now, 5 years from now, and what is the roadmap to get you there? What is the plan to get you there?
Okay. Two more before we open it up. If a business owner were to come to you to talk about retirement and planning, what are the things they need to bring with them for that meeting?
Yeah, just their checkbook and a good attitude, usually. No, I'm just kidding. Our first meeting is very just introductory, and we try and keep it very casual. We don't want anyone doing any homework ahead of time. We want to have a conversation. We want to understand. So you got to know kind of what are your goals? What do you want to accomplish in life? What are your short, mid, and long-term aspirations, personally, professionally, financially, right? Having a good understanding. You don't need to know, to the dollar or to the penny of how much money is in all of your accounts, but understanding what your assets and liabilities are and what your income is a good thing to know, but through that initial conversation, we want to say, our job is to understand kind of what are you trying to accomplish? What are you doing to accomplish it? And then we'll see if we can create a strategy together to fill some gaps. So short answer, yeah, just bring a good attitude and an open mind, and we'll figure out kind of what homework usually gets assigned after that first meeting.
Okay, the homework part. I remember that part too. Nancy, if you could give Courtney a mic, she has a question she would like to ask directly. And when that happens, Nancy or Courtney, if you go ahead and ask.
Sure. Let's get Courtney up here.
I think I got the mic. You had asked
There
my
you go.
question earlier. I put it in the chat. It was related to the business owners planning to exit their business on that survey, and just the percentages equating to 163%. Just curious what the common overlap was, if you guys were aware of it.
No, not aware. I apologize. 163%. That's like, impossible, right?
I found the presentation very, very informative, and really like that slide that chat up there. It just kind of caught my eye with some quick math.
Cool.
Okay, and there have been some positive chats in the chat itself about the presentation and the importance of planning long term, and how we need to always be aware of the economy, and how long-term planning really does start with today. So with that said, Vince, if you don't mind putting your very last slide up again.
Yeah, let me figure out where that went. Points.
And while Vince is putting the very last slide up, because that's where the contact information is, I want to remind you all that you will receive an email from us giving you the details of where to go to download a copy of today's presentation or to view it on YouTube. For any of you who, if you're like me, you have questions that come up after you after the meeting, as soon as you click the leave button, oh darn, I have a question. Here's their emails and their phone numbers. Feel free to reach out to them and ask them questions, because they are certainly the people in the know. People like Chris and I, we're not the ones in the know, but they are. So feel free to talk to them. And as we come up to 1 o'clock hour, I want to say, as your moderator today, I thank you for your participation in this webinar on future-proofing your small business. I also want to thank Rayna and Vince of WestPoint Financial Group for taking the time to share, because I know with this new ruling, they've probably got a lot of things going on. I also wanted to take the opportunity to thank Chris Youngmark of the Bradley Small Business Development Center for being a part of this presentation and co-sponsor. And of course, the University of Illinois Community and Economic Development program as sponsors. So with that said, take care, be safe out there, and we'll see you next time.